Item number 10 on new business, Assessing Department 2023 Revaluation Project Analysis and Preliminary Report.
Good evening, Mr. Chairman, members of the council. Thank you so much. I'm going to be as brief as I possibly can. My name is Steve Hamilton.
Hi, Steve.
I am the assessor for the town. My company is Whitney Consulting Group. I have a contract with the town. With me this evening is Adrian Summers. Adrian is the assistant assessor for the town, a town employee. We work together on a lot of projects very closely. Our teams, the town employees and the Whitney Consulting Group employees, are interchangeable as team members in the assessing role and function. But I wanted to bring Adrian here tonight, especially to introduce you to her and her to you, as she is the head employee within the assessing function here in Londonderry.
Thank you.
Quickly.
Right back.
Every town has to do a revaluation at least every 5 years. The last time that we did a revaluation here in Londonderry was 2021. The town council has determined that it's appropriate to do these revaluations every 2 years. And so this is the next natural point at which we would want to examine the assessment performance and show you what will be anticipated for the revaluation this year in 2023. We need to be able to bring properties to market value, and in the assessing world that means attaining a ratio, an assessment to sales ratio of between 90 and 110% of market value. And so that's the range that equals market value. As we did in the last revaluation, we try to target a ratio. In the last revaluation, we had scoped out a target of between 90 and 95% of market value to try and be within that range, to keep us within the 90 to 110% range, but to leave some room for any error to be below the 100% of market value. DRA, the Department of Revenue Administration in the state, they conduct an overall median ratio study annually. The last time that they completed that was for April 1st of 2022. The ratio, that relationship between assessments and market value, had dropped to 77.3 over the 2-year period since the last revaluation. And so as of April 1st, 2022, the sale prices were approximately 29% higher than the current then assessments. When we're looking at the sales that have occurred most recently, they're about in that range, at about 76% now. We think that a townwide reassessment is an important thing to undertake at this time in order to keep those market values current. And like I said, we're going to be targeting between 90 and 95% of market value in order to hit within that range of 90 to 110%, while staying well away from the 110 end of that range. Some good news is that we have a good distribution of changes in market value. The preliminary analysis that we've completed of 506 qualified sales in the year preceding April 1st of 2023 shows that all property is at 76%, as I mentioned. Single-family homes are at 76%. Condominiums are at 77%. Manufactured housing units or mobile home units are at 64%. They have been the most impacted by the shortage of affordable housing units within not only Londonderry but the greater state. They have seen very significant increases in the value of those units. And importantly, commercial property is showing to be in the same range. I'm not sure that 68% is going to be the final tally, We still have work to do to understand some of the sales that occurred. Commercial property sales can often include a lot of manufacturing equipment and other things that we can't tax as real estate. And so the final result may be different than our preliminary analysis. But overall, the coefficient of dispersion, which is the measurement, if you were looking at an archery target, it would be the rings from the center of the target. We want to see those be greater than 5. You don't want them too tightly distributed, because that would indicate maybe that we were cheating in some way, and less than 20. So at 11 already, based on the model that we put in place in 2021, it's still performing pretty well. What that means is that there'll be less modulation between the different classes of property in the changes in value. It will be much more uniform this time than it had been in 2021. In 2021, there was a lot of changeable percentages of value. Everybody's individual assessment is going to be adjusted to account for the changes in real estate value for their property. And when we complete that, an important part of it is what happens to elderly and disabled property values, because we need to make sure that the amount of exemptions that are granted helps to stay up to date with market value. And so we'll be completing a full analysis of what will happen to the impact of elderly and disability tax exemptions that are granted. Our goal is always to try and make sure there's the same bang for the buck for the people who receive the exemptions on property. Everybody's situation is a little bit different, but we try to make sure that overall there's a similar effect on people's tax bill. We're going to present you, at the time that our analysis is complete, a full analysis and projection of what those changes should be.
Before we send them out to the residents. Before we send them out to the residents. So in other words, we're going to reevaluate people. You're going to come and give us an analysis of what it might look like before we notify the residents what the revaluation is.
We can give you a report of every single value in the community before
Just so
we send
I don't
it
want
out.
people to be surprised by, like, they get their bill and they go, I went up $50,000. And I do understand that we understand that the tax rate will go down a certain amount as well.
Right.
But I just want to make sure we're as absolutely explaining it the best we possibly can before we send the bill out.
We have a great process for that. And you may remember from the last revaluation in 2021, we send out a notice to every single taxpayer during the summer. We invite them to come in and talk to us at what we call an informal hearing. It's a process by which they can talk to me or one of the other appraisers who valued the property and get a full understanding of how we came up with their assessment. And we make those values available on our website for everybody in the town to look at, not only what their assessment is, but what their neighbors' assessments are. So everybody has a good level of understanding. So we'll be doing that entire process again this year. And it includes making that communication here to the council of what the individual results are. We can provide you each with either printed or an electronic form, whatever is your preference. I did want to talk a little bit about, because there has been question at a couple of meetings about the amount of exemption that is granted to the 80-plus category of age. And the question was raised as to what would happen if the town, like the town of Wyndham, determined that once you reach the age of 80, then the exemption would be the full value of your property. I've done some preliminary analysis of what the impact of that might have been in 2021 we don't have values right now, so it's impossible for us to determine what it would be in 2023. But if we look back to 2021 and what the category ranges were in 2021, there were a total of 79 people in that age category in 2021. 30 people in that category paid no taxes at all because the value of their home was less than the exemption amount. And so, 38% of that 79 person population, they didn't pay taxes at all. The 49 people that were in that category that did pay taxes, if they had the rest of their value exempted, that would have been a total of $5,345,500 of exemption. That's additional exemption that would have been granted under the theory that every piece of the value would be exempted.
So that'd be about 3.8% of our total revenue.
That would be value. And so that would convert into about $98,000 in revenue based on the tax
in
rate.
revenue. Okay, I misunderstood you. I thought you were saying $5 million. Okay.
Yeah, you got it.
Okay. So
And that would be
98,000,
about
okay.
1.9 cents on the tax rate. That would be about the impact. Would have been in 2021.
Gotcha.
Okay.
If that makes sense. And so that's.
Can you, is there any way to look at an analysis that, based on the number of 55 and olders we now have in the community, what a projection like that may look like out into the future? Now that we have about 900 homes that are 55 and older? I mean, I know that I'm not asking you to do it tonight, and I'm not asking you to do it for this year, but I'm just asking you to think about it.
I think about
that
it.
alters our decision.
Yeah, and Mr. Chair, I think about it all the time because we have two conflicting concepts when people get to the age of retirement. One is, it's a great time to relax and enjoy life, and the other is, at some point they start to think, I want to make some financially responsible decisions for my future, and they start to plan their estate in ways that changes the way that they might be able to interact with this kind of an ownership based exemption program. So one way that people look forward to limiting the exposure to the expense of maybe a nursing home at some point in the future is to place property into irrevocable real estate trust, and which is a great vehicle to protect it in that way, but it also distances themselves from the ownership of the property, which generally, unless they've carefully planned for it, is going to eliminate them from being able to get an exemption because of the ownership situation. So, and we also want to make sure we have a great set of people who regularly apply for and are requalified for these exemptions that they get. But we also don't want to make sure that we have too big a pile of candy sitting out there for people that may not be in the future as scrupulous about reporting their income and assets as they are right now. So we don't want to create an incentive for a negative reaction. And that would, of course, really kick up the cost of that kind of a program. So that's, in a nutshell, what we think would have happened in 2021. It gives you some sense of it. And when we get to the point where we have values completed and we provide the evaluation of what we think reasonable adjustments would be, we'll also include that calculation of what a full exemption at age 80 would be.
Thank you. Any questions? So we'll look forward to you coming back and giving us the same advanced look that the taxpayers are going to get to understand what might be forthcoming in the December bill.
I look forward to it.
Mr. Chair.
But was there, only a tax assessor could say it looks full.
Honestly say that.
So are we going to have him come back November or October?
Well, when he's ready.
Okay. I guess,
He's got to be ready before budget.
Yeah.
I understand.
So,
I guess the better question is for him is, do you have an idea when you'll be ready?
Well, we anticipate that we'll be ready to send out the informal notices to taxpayers within a 3 or 4 week timeframe. So
From
we're
now?
gonna- Yeah.
Hold on.
So we're going to be,
so that people understand, because everyone will start to talk about that, like, well, what if the market dips? That's why we're looking at it again in 2 years.
right.
So that we're not doing it over a 5-year period anymore. We're doing it to be more stabilizing with the economy and with the market.
Correct.
Okay.
And based on the preliminary analysis that we've done, the market is, the rate of increase is moderating. So, and that's a good thing, and it may even bring a plateau along with it. But for the last few months, since April 1st, things have been relatively very flat. So, and that's a healthy thing for the real estate market and for people who are hoping to break into it especially.
And just to confirm, this is residential properties only?
No, this is all property.
All property.
I know.
Yeah, so when you complete it, we usually have some sort of an idea of whether we're 60-40 or 45-55, with commercial being 45 and residential being 55. If you can give us some sort of an idea of where we're at, that would be great too.
We can give you a summary by category of all of the values.
That would be great. All right, and you all understand that commercial properties don't fluctuate the same way residential properties fluctuate. Okay, everybody understands that. Okay, thank you.
Thank you.
Thank you.
Thank you. Thanks.